Finding the best stocks and shares ISA can be tricky. There's so many options to choose from, some of which aren't so great, and picking the wrong one could cause you so much hassle, and not to mention fees. Every year I spend weeks researching the best stocks and shares ISAs on the market, and this one is my most detailed comparison yet. So here are the best ISAs on the market for the 2024-2025 tax season. Now, before we dive in, there's a couple of key things you need to know. I've adapted the format of this video because I've now got too many providers to fit them into my usual format as it's too long. I have created this as a download for you, which you can grab for free using the link in the description below. If you find these helpful, if you could take a second to hit the like and subscribe button, these are great indicators for me to know that these are helpful, as they are a ridiculous amount of time to make. In all, it takes around 50 to 100 hours per comparison, so let me know and I'll keep them coming. I tried my best to include all of the top providers and ones people have requested from the last video, and these are the ones I truly believe, after all my research, are the best options for this year. If there's a provider you like but you don't see them here, I would suggest using this video as a benchmark to compare them to. You may notice there's a few providers missing here that you might have heard of. A lot of these are classed as robo-investors. These are platforms that automatically put you into managed funds, which most of the time perform worse than just doing it yourself, and the fees for these platforms tend to be higher on top of this, so you lose out. I wouldn't use them, so I can't in good faith recommend them to you either. I only want to recommend things that I would actually use myself. Some, in fact most of the providers mentioned here, will offer some form of a managed service as an option, as it's good money for them to do so. But I'm focusing on the DIY side of the platforms where you can do it yourselves, save on fees, and, to be blunt, get better returns. And for complete transparency, as I believe that's the best policy, I'll show you at the end of this video where I'm opening my ISA with over £130,000 in it, so I put my money where my mouth is. So in the search for the best stocks and share ISA this year, here's who made the cut. We've got Hargreaves Lansdown, Interactive Investor, Invest Engine, Trading 212, AJ Bell. We've got Doddle, which is also by AJ Bell, which is their new investing app. There's Vanguard, Barclays Smart Investor. We've got Free Trade, Interactive Brokers, and Fidelity. Yep, I've been busy. There's been some interesting changes this year as the competition is really heating up. Not great for the providers, but it's great for us, so they all need to be more competitive and up their game. I broke down this video into what I think are the most important factors for you to take into consideration before you open your account. First up, let's talk about the platform fees. This is a fee you have to pay for having your account open, and is typically based on the amount you have in your account. This fee is what could make the biggest difference to you in terms of cost, as a high percentage could become very expensive. Hargreaves Lansdown has a 0.45% management fee, which is capped at £3.75 per month. Interactive Investor has three different options. If you have under 50k, you'll pay $4.99 on the Investor Essentials plan. Over 50k, it's $11.99 on an Investor plan, and there's also a £19.99 per month plan if you want to be a super investor. Invest Engine has a 0% management fee on the DIY service, which is a huge benefit of the platform. Likewise, Trading 212, who are another low-cost provider, charge $0 for account management. AJ Bell tend to always try and be competitive with HL each year. Their fee is 0.25% and it's capped at £3.50 per month. You can see the similarities. Their counterpart, Doddle, is cheaper than the main platform at 0.15%, although I will warn you that this fee is uncapped. This is something you really need to be aware of with platform fees, as on the surface, comparing it to something like their main platform or HL, it seems cheaper, but you only have to get to 31,000 and you are over the charges of the other platforms. Something worth mentioning here as well is, while it might be cheaper for smaller balances, you may want to consider how your portfolio will grow into the future, because if you have to swap platforms, you'll lose historical data you built up at all the points you bought in at the past, which, trust me, I've done it a couple of times, it gets very frustrating. The longer you can stay with one platform, the better your results will look. Vanguard has a 0.15% management fee. This is capped at £375 for the year. You won't hit this until you're over 250,000 in your account. At the top end, this would work out to be £31.25 per month. Barclays Smart Investor has a 0.25% fee up to 200,000, and then it drops to 0.05% on any funds after that initial 200k. But because it's uncapped, this makes it one of the most expensive in the comparison in terms of fees. Free trade is now £5.99 or £11.99. There's a couple of key differences. The £11.99 comes with priority support. So in my experience, having used them, if you want good customer support, you'll want the £11.99 option. There's a couple of other perks we'll mention later, but I think that's the main one and shouldn't be a thing. Paying more for a service you would expect by default doesn't quite sit right with me. I feel like if they're going to charge more, it should at least include a phone number. Interactive brokers have a flat fee of £3 per month, and Fidelity charge 0.35% or £7.50 if you're on their regular investor plan. I think the 0.35% is too high as it's uncapped, so I would lean towards a £7.50 if you wanted to use them as a provider. So for the platform fees, our winners have to be InvestEngine and Trading 212 because they're zero. You can't really beat zero. The losers have to be Barclays and Fidelity as they have the largest uncapped fees. Next is another big one in terms of costs, which is the trading fees. This is a fee you'll pay to buy or sell on the platforms. This will depend on the way you invest. 99% of people will be just fine buying one index fund each month, but if you trade more, it should definitely be a consideration. Hargreaves are known for their large fees, $11.95 to buy, and remember you need to pay this again when you come to sell it. They've made a big change which we'll focus on later, which does help improve this though. Interactive, depending on which plan you're on, will give you 1 or 2 free trades per month, or it's $3.99 per trade, which they've lowered this year. On InvestEngine, when you buy or sell, you will pay 0. Likewise on Trading 212, when you buy or sell, you will pay 0, which is another huge plus of these platforms. AJ Bell has recently made some reductions to their fees, so from April 1st, 2024, it will be £5 to buy or sell a share, and if you trade over 10 in the previous month, it will drop to £3.95. It's a great change from them, showing commitment to becoming more competitive. It's worth noting here that more fees tend to come with things like more customer service options, like speaking to someone on the phone, which some people may value. Although low fees may seem like a no-brainer, you may want to consider what level of support you actually need, which we'll touch on later. On Dodl, it's free to buy or sell on the platform, it's included in the platform fee. Vanguard is free or £7.50 if you want to place what's called a live trade. If you're happy to wait for it to be done at the end of the day, which most people should be, you won't need to pay this. Barclays Smart Investor is going to charge you £6 per trade. That's on shares and in the small print funds, more specifically ETFs. On free trade, it's free to trade, hence the name. Interactive brokers is probably the most complex. It's £0 on some of their core selection of investments, £3 per UK stock, and on US stocks it's $0.005, which is tiny. Fidelity will charge you a one-off fee of £7.50 to buy on their platform. The winners for fees have to be the low-cost options here: InvestEngine, Trading 212, Vanguard, and Free Trade. Although I will give an honourable mention to AJ Bell if you want the phone support. The losers, sorry to say, HL is still very expensive as a trading fee if you plan to trade often, and Fidelity's I feel like is also too high. You can get around this though if you're smart, which brings me nicely onto the next section, which is regular investing. Regular investing is essentially setting up a recurring payment, like a direct debit, to automatically invest for you each month. These are great, and it's how I would advise anyone to invest, just set and forget. This is where you can save big on fees from some of the most established providers. Hargreaves in particular has made a huge step this year in reducing the fee to 0 for this service, as long as it's over £25 per month. What this means, you can now buy an index fund and buy it once now for $11.95. Set up a regular investment, pay into it each month, paying 0 every time. Then you'll pay $11.95 again when you come to sell it in 20 years' time. Of course, you'll still have the platform fee of a maximum of £3.75 for the month, but this makes them way cheaper than the $11.95 per month you would have to pay without a direct debit, so it's worth keeping that in mind. In total, 8 out of the 11 providers will charge you 0 for doing this. The only ones that will charge you more for doing so are AJ Bell and Fidelity at £1.50. Still pretty low cost, and interactive brokers will charge you the usual £3 fee per trade. In this category, really any of the 8 would be a winner for me, and of course interactive brokers would be the loser here. Another important fee is how much they charge you to reinvest funds. What this means is if you have a fund or stock that pays you a dividend, some providers will charge you to reinvest that money. The ones that don't charge you money are Hargreaves, InvestEngine, Trading 212, Doddle, Vanguard, Barclays and Freetrade. Interactive Investor charges 99p, AJ Bell and Fidelity £1.50 and Interactive Brokers £3. It's clear here that any of the 7 would be the winners and Interactive Brokers would be our losers. This fee is actually quite important if you don't go for a fund that automatically reinvests the dividends. You need to be reinvesting the dividends to make sure your portfolio grows as much as possible, as not doing this will make a huge impact on your returns. This will particularly hit small portfolios more. If you get a dividend of £2 but it's £1.50 to reinvest it, it's not much good. To get around this, I would always pick the accumulation version of any fund, which means the dividends will be automatically reinvested within the fund and not paid out to you, so you will bypass this fee. The last fee which we need to be aware of, which could be one of the most important and most expensive, is the FX fee, or in full, the foreign exchange fee. This is a fee you'll pay when buying an investment that's listed in another currency. For example, if you bought a share of Apple, it's listed in dollars, so you would need to pay this fee. Hargreaves charge a 1% fee and this scales, so it gets cheaper the more you're trading. For example, it's 1% under 5k, the next 5k is charged at 0.75%, then 0.5% and then 0.25%. So the amount in total you'll be charged could average out at under 1%. It depends how much you're trading. Interactive Investors is similar but more expensive and it starts scaling from 1.5%. InvestEngine don't charge as it only has ETFs which are denominated in pounds. Trading 212 is super low at 0.15%, which is incredibly good value. AJ Bell's is 0.75% and scales again, very competitive with Hargreaves. Doddle is even cheaper again at 0.5% for the FX fee. Vanguard, like InvestEngine, doesn't charge as it only has ones listed in pounds. Barclays Smart Investor scales from 1% and Freetrade depends on what plan you're on. The more premium plan offers 0.39%, whereas a standard ISA plan is 0.59%. Interactive Brokers is 0.2%, but it's a minimum charge of $2, and Fidelity charges a scaling 0.75% fee. A tip to avoid these is just buy the UK listed version of funds where you can, but bear in mind there will be a cost somewhere because companies within index funds are listed in different currencies, so it will be baked into the cost or performance of the funds somewhere. But if you are buying individual stocks from overseas, there's no avoiding it. My winners here would be InvestEngine and Vanguard, or if you want individual stocks, I would say Trading 212. I'm afraid Interactive Investor takes an L here. If you want to use these platforms with higher FX fees, I would just say be smart about your investment choices to avoid it, and it's easy. Next up is what's on offer on the platform. How many stocks and funds do they have? This one's important because it's no good signing up for a platform if they don't have what you want to buy. Kicking off with HL, they have 8,000 shares and over 3,000 funds. These will include pretty much everything you'll ever need. Most people need nowhere near these numbers unless they're an advanced trader. Interactive Investors have over 40,000, which is huge, and the funds are included in that number too. A good option if you're looking to trade smaller companies, but of course bear in mind that comes with more risk. InvestEngine don't have any shares as they are an exchange traded fund platform, which is what 99% of people should be buying and avoiding stocks. I personally just invest in these within my ISA. They've added a lot more this year and now have over 610 on there. It's worth mentioning they will actually consider adding more if you request the ETFs that you may think are missing. Trading 212 has over 12,000, which also includes their funds. You may see the word included as a bit of a recurring theme, as some platforms don't actually specify how many funds versus stocks they have, and some consider ETFs as stocks too. It's worth noting that a lot of large providers also have a lot of mutual funds which you really want to avoid. AJ Bell have over 2,000 on their platform including funds. Doddle have over 80 stocks and 35 funds and a really limited selection, but that's what the platform is intended to do, to simplify the process as much as possible. Vanguard currently has 86 funds/investments on there. They don't have individual stocks. One major downside in the Vanguard platform is you can only buy Vanguard funds on there. This makes sense for them as it encourages people to invest in their own funds, but perhaps not so great for us as investors. Barclays has over 1,000 stocks with funds included. Freetrade has over 6,000. Interactive Brokers has the widest selection at 50,000 and Fidelity has over 2,400. This is where Interactive Brokers and Interactive Investor are the clear winners for the selection they have on offer. Although typically here I would select a loser. I would say that even the platforms with not very much on them in terms of numbers like Doddle or perhaps InvestEngine, they actually have everyone you would ever need to invest with. I actually think the inverse is true here. Unless you're an advanced trader and need 50,000 stocks to day trade, everyone else would be completely fine on any any platform here, buying one simple index fund, which is what I'm an advocate for. Simple, reliable investing. The next thing you really want to consider is fractional investing. This means you're able to invest any amount into a share or fund. So for example, if a stock or fund costs £100 per unit, you could invest £3 or even £10 into it, rather than needing to buy one share at £100. This is huge and has really changed the way investing works. I would highly recommend utilising this as much as possible, as it makes investing way more accessible to everybody. The more traditional brokers don't tend to offer this, so the likes of HL, Interactive Investor, AJ Bell and Doddle, Barclays and Fidelity also don't. Invest Engine, Trading 212, Vanguard, Freetrade and Interactive Brokers do. I think we've got a clear division here between the winners and the losers. I would say if you're really worried about this and you want to use one of these platforms, just try and invest in the full unit instead. So for example, you bought VWRP and it's just under £100 per unit. Just aim to buy 1 or 2 each month and keep it simple. I'll be doing this with my lifetime ISA, as the platforms that offer fractional investing don't offer lifetime ISAs. Something I think you need to be aware of, and something that may really irritate you, is whether the providers have a desktop or a mobile app, and if it's any good. This one's important because a lot of you may not want to just use an app or just want to use a desktop version. And of course, some platforms are quite ugly and really hard to use. I feel like I'm in quite a good place to comment on this, as I'm a trained graphic designer with over 15 years of experience, and I've tested and used all of these apps personally. Hargreaves have both a desktop and mobile app, which is great. I will admit the mobile app is much better looking than the desktop version though, which seems a bit outdated, although it does have some more functionality like setting up recurring buys on there. I find the mobile version a little bit more limiting on what you can actually do on there, so I'll give that one an 8.5. Interactive Investor again have both versions that you can use. The branding with Interactive Investor I feel is very Marmite. You either love it or hate it. For me, being a web designer by trade, it feels like someone has forgotten to style it. Emotional damage. But I understand they're going for a simplistic approach which does what it says on the tin. It has all of the features you'd want, but I have to knock it down to a 7 just because of the design. I don't find it nice to use at all. Invest Engine has both again and is my favourite in terms of design. I think the team working on the user interface have done a really great job here. Both the desktop and the mobile platform are really easy to use and there's no bloat. They just have exactly what you need and do a really good job of showing off your portfolio data. The key thing that drives them up is the advanced features like rebalancing and portfolio look-through tools, which seem super simple, but other platforms just don't do it. For this, I would give them a 9.5 out of 10, which for me is very generous. I don't think anyone in my eyes could achieve a 10 out of 10, as I always think there's room for improvement. Trading 212 is next, and again they have both an app and a desktop version. For me, the app is slightly better out of the two, as it just feels more robust in terms of design. The app is really easy to use and perfect for beginners and for more advanced people wanting to trade frequently. This would have been a 9, but the one thing knocking the platform down for me is some features can be quite difficult to find. Things like trying to move investments in and out of pies seems quite clunky to me, but apart from that and a few other niggles, they're a solid choice. AJ Bell I'm not overly keen on, to be completely honest. It works, but the platform looks a little lacking compared to others. It's easy enough to use to buy and sell shares on there, but I feel like I want a little more oomph from the platform I'm using. One neat feature they do have is the ability to turn on live UK prices, which is very nice. But overall, I would give them a 6 out of 10. Their counterpart, on the other hand, Doddle, is really nicely designed. The downside to this one is it doesn't have a desktop version. It's only a mobile app. But you can tell with the mobile app they've really put some money into getting it right. It's nicely designed and it's really easy for beginners to understand the types of accounts, learn more about investing and easily find investments which are all explained well. This one in particular is a one I own in my lifetime ISA that's called the On Top of the World Fund, which is a HSBC FTSE All World Fund. This one's performed great in the past and it does a nice job of explaining what's inside the fund. I think it's still early days for Doddle to see how it goes. I'd knock them down a little for being app only, but their design and interface for the app is really nice, and a nice surprise from AJ Bell. You can see they're really trying to make a push to appeal to the younger generation. More apps I think need to take this step before they get left behind. So overall I give the experience an 8 out of 10. Vanguard I've been using for the past 3 years and unfortunately it still doesn't have a mobile app, although one is rumoured to be coming soon. It was rumoured since last year though, so I'm not holding my breath just yet. The US does have a very good app, so hopefully we'll see that one rolled out. The platform took me a bit of time to get my head around, but now I really like it. In particular, I really like the way I can search through my portfolios and see my returns and all the points that I bought at. The one thing that really bothers me is this number that Vanguard have here, which I feel is really skewed. It makes your returns look much better than they are. It's actually 14.9%, which is great, but I'd rather just see that displayed here. What Vanguard does do a very good job of is breaking down the investments by month, so I can see how much I've made. It's worth pointing out here that this is a pension account, but the ISA and SIP look exactly the same. Overall, I've been really impressed with the robustness of Vanguard, and I'd give them a solid 8 out of 10. This would definitely creep up once they get the app in place. Barclays Smart Investor has both a desktop and a mobile app. I'll admit I had to borrow access to this platform as you have to be a Barclays customer. I'm not, and I don't want to open another bank account. I've added some screenshots from the app. It's pretty much what you would expect from a bank designing an investment product. It's very basic, but it does what you need. I'd give this one a 5 out of 10. It's not the best, but not the worst. I think what stands out here is that the independent investing platforms for me are better, as they have more time to focus on the actual product itself. I can imagine Smart Investor isn't Barclays' top priority. Freetrade has a desktop version which is included in its Plus subscription now. I'm not completely sure as to why, as it's very lackluster in my opinion. It's definitely not a perk. It just feels very meh. It's almost like they've just adapted their app to be a website. They do have a mobile app though, which is very good and one of the most impressive things about Freetrade. I enjoyed using the app and I found it very intuitive and easy to buy and sell on there. I don't think you'll have any issues. One thing that really does bug me now is they've adapted this almost freemium model. You're pretty much bombarded with upgrade messages on positions not included in their free account, even though they were in the first place. There's 350 included for free and the rest you need a paid ISA. All ISAs are paid though, so it doesn't really make much difference if you're looking for an ISA. It's just more frustrating to someone who's downgraded or a new customer, whereas Trading 212 will have it all included. For me, I find that a bit of a weird model. I'll exclude the promotions from my score as I don't think they apply if you have an ISA, but the lacking web app does let them down in my opinion, so I'll give them a 7 out of 10. Interactive Brokers is an interesting one. They have a desktop and a mobile app, but the experience is quite frustrating. You need to download the desktop trading app and the mobile app separately, and you have to make sure you have access. My desktop details wouldn't work on the mobile without calling customer service, which seemed like a clunky experience. The interface is hard to comment on because on the one side, I'm sure it's great if you are advanced, love data, and really have time to understand what you're doing. If you aren't in that small minority, you will likely find it too complex, hard to work out, and frustrating. For that reason, I'd have to give them a 5 out of 10 because I'm still undecided. My experience as a user, it wasn't an enjoyable one. Last but not least, we have Fidelity, who have both a desktop and a mobile app. I've always found Fidelity's actual website to be very well designed for investment research. In fact, people always used to ask me what app I was using and it was just their website. But in terms of the investment platform itself, it works, but again, I got the same feeling as I got from AJ Bell. It's great, and it works, but it just feels, I don't know, lacking. I suppose it will do what you want. I don't know whether I'm just so used to more put together apps now, with everything being so modern, but this feels at least 10 years behind where it should be. I'll give it a 6 out of 10, but I have to admit it does feel like a letdown. For this reason, I'd put Fidelity, Barclays, and Interactive Brokers as the losers, and for my winners, I would pick Invest Engine and Trading 212. I do think though Vanguard may be up there next year, we'll have to wait and see. Something I always like to touch on is research on these apps, meaning what you can do within the platforms to research stocks and funds. Now typically I wouldn't recommend using these specifically for research, as there's much better external apps. But honestly, most people won't ever use an external app unless you're trying to do something pretty complex. Therefore, the data you get on the platform is probably all you'll end up using. Thanks to regulation on all platforms in the UK, they have to legally have a key investor information document, which gives the basics, but it's pretty ugly. Beyond that, the platforms can do a lot to break down what's in the fund, the fees, the price movements, and any news, which can be quite helpful and interesting if you're into keeping up to date on what's going on with your investments. For these, I would categorize them into 3 categories. Trading 212, Doddle, Vanguard, Barclays, Freetrade, and Fidelity are what I would class as okay. They have some information, but I feel like it's neither here nor there. I wouldn't really miss it, and it's not something I'd particularly look at. Next up would be AJ Bell and Interactive Brokers, who are in the some category, which is slightly above what we've just mentioned. Interactive Brokers offer a very good paid one on top of their free info, but most people won't go for this. And then there's the decent tier with HL, Interactive Investor, and Invest Engine. These are better than the others in my opinion. They're not crazy good, but they're enough for everyday investors. For me, a really good research platform would have things like analyst predictions, more detailed news, earnings reports, etc. Not crazy details, but it's something that I would like to find more on these platforms. I wouldn't particularly say there's any winners here, as none of them take my breath away, but it's handy to know about anyway. Next up, I want to talk about how safe your money is, because this, in my opinion, is extremely important. You'll be happy to know that all of the firms in this comparison are regulated by the FCA and covered under the Financial Services Compensation Scheme here in the UK. This means your money is highly regulated and it has to be segregated. For example, if the company went bust, your investments couldn't be claimed against. This one comes with £85,000 worth of protection on your cash. Your investments are held separately, so you would still own them. An interesting fact I stumbled upon recently is actually your money has to be segregated too into separate accounts under a separate ruling by the FCA. So although the £85,000 protection exists, it's more of an extra safety measure. I mean, it makes sense. The FSCS doesn't want to be paying out if they don't have to, so they'll make sure it's all safe in the first place. Another factor you may want to take into consideration is the company age, how long the company has been going for. Hargreaves has been going for over 36 years, Interactive Investor 37, Invest Engine over 7 years, and Trading 212 over 8 years. It's worth mentioning that I've gone off the registration date of the company here in the UK. Some, like Trading 212, have been going longer in different countries or under different company names. AJ Bell has been going for 21 years, Doddle for 1 year. I think it's up to you whether you put that all under one umbrella as AJ Bell or class Doddle as a separate service offering. Vanguard is the longest at 48 years, Barclays Smart Investor has over 7 years. Again, if you class them as a bank, it's over 100 years, but I would class it separately. Free Trade has been going for over 8 years, and Interactive Brokers over 28, and lastly Fidelity over 21 years. I think within these, the winners would be the likes of Vanguard, Interactive Investor, and Hargreaves. I mean, the difference between someone being 30 and 20 years old is very minimal. What we need to remember here that the lower cost providers tend to be newer, but what they're doing is trying to break out of the traditional investor mold and offer something new, which in itself is a relatively new concept. I think given that the majority have been going for over 7 years and they're all fully regulated is a pretty good sign. What we can look at though to give us a better indication is Trustpilot reviews. This one I would take with a pinch of salt, but it's still good to know because it heavily depends on how invested the company is in building their Trustpilot, which honestly, having worked with clients who use it, can be pretty damn expensive, you would be surprised. So some companies will really push for reviews and others not. It also helps how long the company has been going for, of course. Hargreaves has over 9,000 reviews with a 4.1 score. Interactive Investor has a whopping 23,000 reviews with a 4.7 score, which is very impressive over such high numbers. Invest Engine has a 4.6 score with over 1,000 reviews. Trading 212 has 4.6 with 25,000 reviews. And a lot of that comes because the company compared to Invest Engine is actually much older, just under different names. AJ Bell has a 4.8 score across 5,000, which is surprisingly impressive. Doddle has a lesser score at 4.5 with 150 reviews. I think this one is to be expected as it's new and people may expect more from the app, but it's still a good score. Vanguard has 4.1 over 2,800 reviews. Now, Barclays, just hold your breath, has a score of 1.4 with over 10,000 reviews. There actually wasn't an independent Trustpilot for the Smart Investor apps, and actually most banks get trashed on these sites. People do not like banks. Free Trade has a 4.1 score with nearly 4,000 reviews. Interactive Brokers 3.8 with over 2,100 reviews, which doesn't surprise me as it is hard to use. What's cool is this year we can actually use AI to analyze the reviews and tell us what the top complaints were. The top 3 being poor customer service and support with long wait times and unhelpful responses, technical issues on the platform making it difficult to navigate, and 3 was complaints about the user interface being non-intuitive and challenging to use. reviews, which doesn't surprise me. And lastly, Fidelity have a 4.2 score with over 4,500 reviews. The other consideration here is that people generally go on these sites to complain. I mean, how often do most people think to positively review something versus complain when something annoys them? And I think as a culture, we do like to complain. I wouldn't be put off by any of these results, even Barclays I think it is skewed. Try it out for yourselves before making up your mind. Something that may be a deciding factor though is customer support. This is grouped into 3 categories. We've got phone support, ticket support or email support, and live chat. Every provider offers ticket support as it's the most common, and sometimes you will get the best response that's to the point. If you want to be able to pick up the phone and speak to someone, you'll need to go with either HL, Interactive Investor, AJ Bell, Vanguard, Barclays, Interactive Brokers or Fidelity. In general, the more expensive providers. If live chat is important, there's Trading 212, AJ Bell, Doddle or Interactive Brokers. Personally, the support you get on live chat is usually very entry level. I always opt for ticket support. Even phone support, generally the most technically inept people aren't on the phones, as it wouldn't make sense cost-wise for them to be so. I prefer ticket support because if I submit a ticket and the level 1 support person can't deal with it, it gets fired up the chain quickly to the right person who may not be available when you need them. And I don't have the time to sit on hold. So I think phone support is good, but if it comes at a premium cost, I really don't value paying for it, but some people will. I will say the really disappointing thing here is Freetrade charging premium for priority support. I think that's pretty shocking, and having used them and needing support, I would definitely have to pay for priority support if I use them again, which makes the platform more expensive for me. Another key element worth mentioning is bonuses. Some platforms offer bonuses when you sign up, and I've tried to get whatever incentives I can from providers to give to you guys, and I've also asked that they're permanently there, as if you don't go through the link, sometimes they aren't available and people don't get them. I've had a few people complain, so just double check you're using the links in the description. InvestEngine has up to have multiple ISAs. I find that a bit messy and I would prefer to just have the ones open that I'm actually using, so try before you buy. I also want to highlight what I think are unique features for each platform, because each is unique in their own way. For 3 of these providers, Hargreaves Lansdown, AJ Bell and Doddle, their USP is the fact they offer a pension, a lifetime ISA and an ISA in one place, which if you want all your accounts in one place is incredible. I'd love it, but I don't want to pay a premium for doing so. The big issue is a lot of providers don't want to touch the lifetime ISA because it's a lot of work and it doesn't generate enough revenue. Interactive Investor in fact are actually calling for it to be scrapped. They dislike it so much. This is mostly because it's not profitable, but they also claim it's confusing. What Interactive Investor do have though is one of the best pensions on the market. Because of how their flat fee works, it works out to be one of the cheapest, and that's a good perk of the ISA, especially if you want to have your SIP and ISA in one place. InvestEngine have done something similar now, and they've launched their SIP, which is very impressive and is pretty cheap too, so you could have both in one place on there too. But the best features of InvestEngine are actually the portfolio rebalancing, so you can automatically keep your portfolio at set percentages. But even more impressively is a portfolio look-through tool. What this does is show me a breakdown of what individual stocks I have within my index funds. So without having to directly own stocks, I can feel like I own stocks, which is awesome. Trading 212 has trading pies, which does a similar thing. You can create a pie of companies you like or funds and then choose to automatically invest into them each month, which is really impressive. Just be careful to make your own pies and not copy others who might not really know what they're doing, even if they do seem like it, because anybody can make a pie. Trading 212 have also started offering a massive interest, which is around 5%, which is amazing, but take that with a pinch of salt because it might not always be there. Vanguard also has a USP that it pays 2.6% interest on your money on account, which is good. Freetrade does something similar with 3% or 5% paid on a set amount in your account. This can actually help offset your costs as long as you have spare money lying around. I don't love this though, as I prefer to have that money invested and it seems a waste. In fact, I wouldn't go for just interest alone across any of these platforms. You should be investing all of your money that you plan to have within your ISA. Barclays you can connect directly with your bank, which is good and something you won't find with other platforms. Interactive Brokers, if you feel like you want something more advanced and want to geek out with it, this is a good choice. Fidelity, the site has really good stock research, but I wouldn't particularly note anything too memorable within the app or website that stands out, which is unfortunate. What I also wanted to touch on was multi-accounting. So if you wanted all of your accounts in one place, here's the providers that offer it. These providers currently offer an ISA. The following also offer a SIP, and here's the ones that offer a lifetime ISA too. For me in particular, I want to have my SIP and my ISA in one place, at least for now, and I'll hopefully be able to have my lifetime ISA there one day too. But splitting your accounts across multiple providers isn't a bad option, as it does give you some flexibility if something ever went wrong. That may be worth considering though, although you may have plenty of time to wait. If you don't, it could be frustrating if you're nearing retirement, for example. At that point anyway, you would probably want to consider other options, like what withdrawal facilities are available, especially regarding pensions. Now let me make this a bit easier for you and rank them in order who I think is the best to the worst. For those of you who are not familiar with this is a tier list with S being the best and F being the worst. First off, starting with the two newest additions, Fidelity and Barclays. I have to say I can see why people are using them, especially if you're a Barclays customer. But for me, both of these platforms just lacked substance. It's fine if you want the bare minimum, but coupled with the more expensive fees, for me they're bottom of the list. Interactive Investor I think is good because of their SIP. I find the fee structure a little bit overly complicated, but I can see why they've done it. Really not a bad option at all once you get your head around it, especially if you want a SIP and an ISA and maybe junior ISAs in one place, so I'll put them in my B tier. I'll also pop Dodl here. I think the platform is pretty limited, but it's got the all-world fund, which is a really good one, and the design is very simple to use. I'll put it here. The only real downside I see of this platform is a fee not being capped. So once you get over the 31,000, it's going to become more expensive than the other options, sadly. Perhaps they'll change this in the future. AJ Bell I'd have to put below Dodl. If they could up their design to be more in line with Dodl, I think they could definitely move up. They're competitive with HL, but I think HL's recent changes have helped them massively. Hargreaves Lansdown would now sit in my A tier with the changes I mentioned to regular investing. Although regular investing isn't the nicest thing to set up on there, it's easy enough to do, and has now made the platform way lower cost. You can just simply set up a direct debit into the account and massively reduce your costs. The customer support with them is next level too. I was always super impressed. I've been a customer with them for over 15 years, which is crazy. Interactive Brokers, I'm afraid I know a lot of people will love it, but it's going to sit in my C tier. While it's super advanced if you want to be a day trader, I think for 99% of people, they just aren't the right fit. If you aren't a day trader, I don't know why you would want to give yourself the extra hassle or cost compared to Trading 212. Trading 212 would sit rightfully in my S tier. It's such a good low-cost platform, you really can't beat it when it comes to stocks. The desktop and mobile app are both really good. There's a few niggles, but once you learn how to do those things, it's nice and easy and it's great for beginners. Trading 212's old rival Freetrade, I'm afraid, is down in my C tier again. The poorly designed web app being paid, certain stocks being restricted to ISAs, charging for customer support, I think are just poor choices all round. I'm aware the company has needed to make changes to increase profits, but I'm not sure these are the right ones and will likely push customers over to other platforms. If I was going to pay for support, I would rather pay for phone support from Hargreaves over paying for Freetrade, and it would cost me less. Vanguard I would put in my A tier. It's a solid platform, I've been using it for 3 years for my pension. Adding the mobile app would definitely give them a strong boost. The problem is, however, I don't know if that would be enough to push them up into my S tier, because now we've got Invest Engine, they offer the same service for less fees, 0.15% versus 0%, and their pension is cheaper too. So that would put Invest Engine into my S tier for the mentioned reasons, as well as them having that portfolio look through tool, which I love. They've also got the SIP and other tools like saving plans to automatically invest, and the rebalancing tool I use on my own portfolio. My only complaint would be I would love them to get a lifetime ISA too. I've been super impressed with Invest Engine so far. I've had my ISA with them the last year and I'll be opening again with them this year. And as promised, here's my ISA that I have with them. I've still got some money to add in here before the allowance is reset, and I'll be bringing across my SIP over here shortly too. This is the account I'm planning on building right up to 1 million here on this channel. We're around 20% complete so far once I combine my accounts, but there's still a long way to go. If you want to see how I get on with that, do subscribe and follow this journey, and I really hope this was useful. Let me know any questions and I'll do my best to answer them all. And once again, the download for the full comparison will be on the link down below. I've recently just posted my latest portfolio update 2 on my journey from 0 to 100k. If you missed it, you can check it out right here, and I will see you guys over there. Thanks.